is ripping.
My tummy hurts. Pretty good, red man.
Hey guys, what's going on? It's Nick with Off the Chart Trading. I'll be doing tonight's video for Thursday, February 10th. Hopefully you guys had a good day. Not a dull moment lately, and definitely today can attest to that. So CPI data came out relatively early, about 8:30, and the initial reaction was pretty bad. All the indexes dropped pretty big. I think the NQ was down like 200 or maybe a little more than that. ES I think was down 60 points, maybe 50 points at the lows. So it was looking like it was going to set the tone for that for the rest of the day. And then, we opened and we didn't really drop too much. We actually held on pretty decently, and then we kind of went straight up. So it was kind of like the market was already either factoring it in or just shrugging it off and just saying, all right, let's continue higher. And then I don't remember what time it was around 1:30 or so. I guess Bullard came out and said that they were going to try to, I guess, start with 0.5 and get to 1% by, I think it was June or July. So I think that was probably a little more aggressive than I guess the market was anticipating. We'll still see. I still think they're going to do 0.25 unless February's data is just as bad, because they were expecting, 7.1, 7.2, whatever it was, and it came in at 7.5. So overall inflation data is definitely cause for concern. I personally still am in the camp that I think after March it will flatline or at least drop, and things will slowly get back to, I don't want to say normal, but supply chains will ease. The turnaround time at the peers will get better, and I think it'll probably be mid-year, so June, July, maybe August going into fall. I think we'll be in a way different place as far as inflation and everything else. I mean, obviously I could be 100% wrong, but that's just what I'm looking for, and we'll see how it is. But I expected the overall inflation data to get, like I said, sideways to down going into the end of last year, and then early this year kind of seeing it. But really, I think for the year-over-year data, I think March, because obviously that's when it was really bad with COVID of 2020, the year-over-year data, I think, I don't know, it's almost like starting at March and going from there, I think is probably the best parameter. But that's just my opinion. The market doesn't ask me what I think. But anyway, let's jump in. I was going to say overall, I mean, it was pretty solid. I was looking at this right before I hit play, and, we ended up closing above the 8. It was looking pretty bad last week. Actually, excuse me, this is a monthly chart. Last month we dropped below it, still end up closing above the 8, and it was looking like we were going to potentially come down to almost 4,000 or so. Ended up closing above it and remaining once again all green for like the last year and a half, and then here we are kind of just sitting on it to start this month. Well, obviously we're already about a week and a half in, but you get the idea. In the weekly, obviously shows a similar pattern where we had that really bad week. It got even worse, finished up still low, but that's a nice looking candle, some decent follow through, and then up till today's price action, it was looking like we were kind of just potentially going to head back up, whether it was to hit all-time highs or baby steps, 4,600, 4,650, somewhere in that range. So the tug of war of this market, I think, is still in full effect, and that's why in our group specifically, we're what I say is you're either scalping, you're day trading, small swings, small setups, maybe run up to earnings, that type of thing, or you're looking at stocks that you think will be big over the next 5 or 10 years and just dollar cost averaging in them, because a lot of the growth stocks have been hit 50, 60, 70, 80, 90%. So cost averaging into those, I think, ultimately is one of the better ideas. So deploying capital for a longer term outlook, but in the meantime, being able to take those quick trades and stuff. We took a few. I'll go over some of them today. But anyway, I just wanted to look at the ES, start there, and then we can look at the NQ. Obviously, NQ did close above, or I should say below its 8, and then here we are below it. So, once again, bigger time frames. Think of it dominoes, a 1 minute chart, and then you get to those massive ones, and that's like the monthly. So, weekly, we've been closing below the 34 over this last month, because obviously this candle will close tomorrow, and it's still not looking that great. And the other thing is the 10-year. I mean, at one point went up to 2.5, not 2.5, 2.05, which is pretty crazy. I mean, it's just been straight up almost since the beginning of this year. And I think that's what potentially was a double-edged, not really double-edged sword, but just, you have Bullard talking, and then you also have the TNX, which that's just the way I watch it, the TNX. But that's obviously the 10-year, however you choose to look at it. But seeing that slowly climb up, I made a post about that in the room. Let me see if I can so you guys can kind of see. Where is it? There we go. Let me bring that off screen for a second. Let me see. Yeah, there we go. No, come on. I guess it was early. Yeah, I was organizing my basement, so I took a little break from being in my office. And basically, what I was saying is the cumulative ticks were at the lows. VIX was picking up, so it's kind of the downtrending of the overall ticks, the cumulative ticks, and then the VIX slowly climbing up. Basically saying I'm not loving the action. I pointed out the TNX was still climbing, so even though markets were holding up fairly well, and all things considered, that it was kind of a 180 from what the initial reaction was at 8:30. I was still kind of like the spidey sense, like something didn't really feel too right, and then ultimately ended up getting some puts in the Qs, and I randomly checked my phone, because this trade was not working right out of the gate. I was actually down, I think, like 30 or 40%. And then ultimately, I randomly pull up my phone. I'm like, there had to be news. I text Ed. I'm like, yo, what's going on? And he told me Bullard was talking. And then they ended up start working. And I got out. So that was one of the intraday trades I took today. But it's kind of how, if you guys aren't familiar, it's kind of how we work trade alerts. So I give people an idea of what I think, why I'm taking the trade. And then, obviously it's Ed and Brett and everybody else that posts in here, but basically just showing how that works. So if you are at work or not available, then you ultimately have the ability to see what we're doing, and sometimes it could just be an update or just trade idea. You take out your phone, all right, market actually looks pretty good, but because of X, Y, and Z, there could be some weakness. Yeah, I'm long, let me do the same thing. I'll just take the trade, whether it's the SPY or the Russell or the Qs as well, and just see how it is. And sure enough, that ended up working out as per usual. Sold a little early, but in this market, I'd rather take the quick money, take the money and run type thing than overstay my welcome, because there's plenty of times where, a good example, if you went short out of the gate today and I did the same thing where I walk away and I come back an hour later, I'm gonna be like, oh shoot, what's going on? The market's green and we're rallying. Obviously we look at the NQ for that reference, but yeah, I mean, literally at 9:30, you had a little dip and it was just straight up for almost hour and a half, 2 hours, and then got a little rocky, and then from there it looks like, yes, I think it was about, was it 12:45? I thought it was around 1 o'clock, but regardless, got that 8:21:34 cross, white arrow down, and then we just stayed in a downtrend the rest of the day. And it's just, here we are after hours, down another 65 points. We did take out the lows, right, or came pretty close. We'll see if that holds. It's not looking like it's going to, just judging by how that's trending down. But Russell was actually really strong. That was something I noted out of the gate, that it was, just literally at 9:30, it was just straight up and a lot stronger. And that's why I love these color-coded candles, is because, it does paint that picture instantly above its 21, and then above the 8 and all the other EMAs. So green, you had a lot more green in the Russell. And you can play that, the IWM. I think Ann and some other people took IWM and made some good money in that. And, like I said, just during the day, giving ideas. I didn't personally trade anything in the Russell today, but just pointing out the relative strength versus, not that everything else wasn't moving, but not to that level. And typically what's, strong, where the strength is, where the money's going, that trend will continue throughout the day. Not always, because obviously we saw 180. Mainly that's news, and you can't predict when someone's going to potentially speak and do something like that. But nevertheless, ultimately ended up working out for people. These candles are free for members. They're pretty cool. And like I said, some of the buy arrows for the crosses and stuff, whether it's the 8 over the 21 or the 8, the 21 and the 34, I think are pretty good. So you can kind of skim and kind of see. And you don't want to use them when there's no movement. Obviously, you can see that it kind of starts getting real around 8:30, and from there you can play, the down or up. But they're cool. And like I said, we don't charge you like most websites for that stuff. If you're a member, you're already paying to be a part of the site, so why charge you extra for something when that should be included? So we include all that stuff for you guys. And if you're members and you don't have them, I can tell you how to do that on the site. You just go under main, or my internal screen, which is the screen you're looking at, or the ETFs, they all should have those. And you don't have to use the specific layout. You can always just take the code and make it your own. Like I said, it's pretty cool. But yeah, I mean, that's pretty much it as far as the internals themselves. One thing I wanted to show, this is Bookmap. I don't know, maybe some people are familiar with it. I don't know if Thinkorswim has actually officially come out and made comment that they have this partnership. One of the members mentioned it many months ago that they actually had a tutorial and a like a trial for it, because it was like in beta. If you guys use Toss and you hit chart and you don't have this enabled, you won't see Bookmap right here. So that's something to you can reach out. You can hit support and then create support requests and just chat with somebody and just enable. Just say, hey, I'd like to enable Bookmap. And I think you get 3 stocks for free. I think it's the ES, Apple, and Microsoft, just to like try it out or whatever. But if you want it on basically everything, you can have them enable it. It's only $40 a month. And for stuff like today, I think it was helpful. Ryan made a comment about it. Just, can we put that up on the screen? Because I switch in between it. Normally, the only time I use it is for, you want to see visual levels. You're using level 2 to basically visually see, rather than just, we got 2,000 of the bid, we got 5 million, we got this. Instead of seeing the numbers go through quick, it actually builds out as levels of support and resistance. And there's a lot of cool tools and other stuff, but I literally just look at it for the levels themselves. What was it? I wanted to show A-Firm because that's what we were initially looking at. I don't know if it's going to require me to go back. Hang on, wrong way. Is it? No, it's going to be okay. Cool. Hang on. Beep, beep, beep. Normally just use it intraday and never look back on this stuff. Where is it? Oh, my pointer. Come on. You can do it. You can do it. Point and click. And then enhance. Enhance. But one thing I just wanted to show, this is around the time we played it. It got halted a couple times. Actually, no, it was lower. Come on. Yeah, I can tell these were the halts, just judging by the price action. Yeah, so I actually went long A-Firm at around $50, or it was 52. I think I got filled, and it didn't get much lower than that. I got down to just about $50, and then we bounced off really nicely. I mean, that was almost a 15-point move in a very short period of time. You're looking at about 15 minutes worth of work. So I just bought 100 shares. I was initially going to buy options and just buy calls in it, but because of the halt, and you can see the price action, see how it kind of stops. So there's a halt right there, and there was another halt on the way down. I think A-Firm's earnings got leaked. I don't remember exactly what was going on I think somebody leaked it on Twitter or whatever, and it was just dropping. But then CNBC picked it up, and I have the little window going in the corner, and they beat on revenue. They're raising guidance. I think their burn through cash was a little more than the previous year. Like the year over year, they're spending more money. But as a growth company, and especially you're getting partnership with like Amazon and doing all this other stuff, most people are going to focus on the revenue growth, because as long as the revenue is growing, in theory, profit will eventually happen. It could be years away, but you just want to see that revenue growth. So if they're, in a market conditions like this, that's the biggest thing, is guidance. I think that's what a lot of people look, we're, reiterating guidance, or we think this year is going to be better, or, the next 2-3 quarters, we're going to raise, or whatever. That's like the best thing that you can possibly do to get, buyers. And yet the stock dropped from like the high 80s or mid 80s to like $50 in a very short period of time. So we ended up playing in the room, but I noticed that there was no red. That's as dark as it gets up here. You can use as a reference. There was a big line around $50 that was pretty solid orange, and you can see the build out over here. But to me, it was just kind of overdone. It didn't really make sense. And typically, even if it does make sense, there's always going to be that bounce, especially with algos and everything else coming in. So we saw the selling and stuff, and I ended up going long at 52. I put a stop at 55.40 or something like that, because when you see these types of moves, if I can make a quick $300 in a matter of like 3 or 4 minutes, I'm not really trying to swing for the fences. And as always, hindsight, oh, well, it got up to 65. So, you could have made like $1,300 if you held an extra 15 minutes. In these types of situations, especially if I'm trading stock and I'm up, I'd rather just put that stop in. And the way I look at it, I'm guaranteed, or as close to being guaranteed, money. Because if it drops, I get stopped out, I make money. It keeps going higher, I literally keep raising that stop. So eventually I do get stopped out and I can make X amount. So, like I said, it was a good area. Like I said, around that, I think maybe I set it to exactly 52. I went to 51 and then got into the high 50, like 50, 89 or whatever the low was, and then instantly popped and went back up. So we caught that. I know some of the members in the room caught that too. I ended up doing shares mainly because the bid ask was like $3 or $4 wide, and that will happen with all, with halts and the IV, and it just money makers get in there. It's just it's a crazy environment, and the fact that the shares were only $52, why not lock up, was it 5,000 or whatever, just for that one trade, obviously, and manage accordingly. If it continued to bleed out, I would have put a stop probably at 48 or 47.50 or something along those lines to obviously offset, because that's what I practice and preach every day is risk management, position sizing, and not YOLOing all your money into one trade like this, because that's typically how people get blown up. And I try to make sure that doesn't happen, so that's why I'm always on top of it. But I just wanted to show this cool tool. Most people don't even know it exists. It's not something I don't think they're advertising, and I think they're just trying to slowly roll it out, because Bookmap by itself is typically like $200, and then if you want futures, you want this data feed, you're talking $400 or $500 a month. I think a member or two actually have Bookmap, but for how I want to use it, just being aware that, okay, cool. And I even mentioned that in a room, as it was moving higher, I'm like, there's not really any resistance up till 65. And sure enough, that's kind of where it slowed down. And then we fell from there. So it's a very helpful tool. And just one more thing that adds, value to the room, that I can share the screen. And just if anybody wants to day trade it, they can see the levels. And granted, these levels can change. If somebody pulls the bid, or I need to get into the stock, it's a great deal at 50, and they put $1 million in, then obviously you might not be able to see that. But if there's orders sitting there, then it can just visualize those levels of resistance and support. And you can see, big green circle, there's a lot of buying. You can put your mouse over it, you can see how much volume it was and at what price. And obviously if it's green, then there was more buying at that time. So, and there's a lot of different tools. When you right click, you can go in everything, and it's pretty cool. I mainly use it for those instances where there's things halting or it's very quick. I think it complements Brett's style of trading too, because he's very, or we have Benzinga News, Ali Baby, going to the highs or whatever. And if it's off of news or whatever, we want to see potential levels of resistance and support in the moment, and seeing it play out, I think is pretty important. So anyway, I figured I would show that tool, because maybe some of you guys don't know about that. So you can actually, like I said, either call them or message them, just say you want to enable it. If you want to do the free one, like I said, I don't know if it's changed, because this is about 6 months ago. They give you the ES, I think Apple and Microsoft, for free. I mean, I mainly look at the ES. I don't use the ES too much with this, because you'll see what I'm talking about. Normally, it's actually not that bad. Maybe because it's later in the night, I think it's about 8 o'clock. Normally, you'll see a lot of different levels. So it's not that helpful as soon as you zoom in, like, oh, dark red, and it's only like a point or two higher. But if somebody's trying to scalp 3-4 points on the futures, then it can be kind of helpful, because then you can see there's decent support at 44.76. And if we were to go higher, then that potential exit would be around 44.79, because it's pretty smooth sailing. Granted, it's futures, it's pretty late, it's pretty illiquid right now. So not the best example, but normally during the day, you'll see a lot more. So I don't really use it for the futures, but look at that. I just caught 4 ticks, a full point right there, and looks like it could easily go up to 44.79. So you could put a stop in at 44.78 and catch 3 points or whatever the case may be. On a 2 or 3 lot, that adds up pretty quick. Yeah, there you go. Kind of unfolding as I'm saying it. Anyway, as always, hopefully it's helpful. If you guys have any questions about any of this stuff, comment below, or reach out to us at offthecharttrading.com. You guys have a wonderful night, and I'll catch you at the next one.